Hi guys, welcome to today's welcome session. If you haven't been to one of these before, it's just a basic overview as to who we are at Darwinex and Darwinex Zero, what we do, and how we can benefit you as traders. Now, I'm happy to answer questions as we go through the session, but I like to keep this one fairly simple. And we kind of cover the more advanced topics and the more complex things on a Thursday session. So if you would like to, feel free to ask complex questions today, but I won't be going through anything from terms of a risk engine perspective or value at risk or any of those kind of more complex nuances. That's the sort of stuff that we cover on a Thursday session. If I can get the stream to work, that would be absolutely fantastic. My name's Kieran, and I'm head of UK growth and business development for Darwinex Zero. If you're in the Discord, you probably see me around, or if you're on social media, then you've probably seen videos of me floating around recently as we're stepping up our game with our content, both long form and short form. If you don't know who we are, Darwinex is a regulated asset manager and broker, and we also have our hedge fund licensing as well, which we'll get onto in a moment, and I'll explain a little bit more about that in today's session. We're regulated in 3 separate jurisdictions. So we're regulated in the UK by the FCA, in Spain by the CNMV, and in the Seychelles by the FSA. Currently got over 100 million US dollars invested from third-party capital. So that can be hedge funds, private investors, high net worth clients, anybody that you can think of. And we currently have over 11,000 active trading accounts, both in Darwinex and Darwinex Zero. Our main job as a company is to connect good traders with investors who would like to invest capital to diversify their portfolio. Now, what you might be wondering, what is Darwinex? And when I say Darwinex here, it's interchangeable between Darwinex and Darwinex Zero. We are the same company. We have 2 different paths, again, which I will cover in more detail shortly. However, what I'm talking about covers both organizations. Now, Darwinex is the only place that you can become a professional asset manager and access third-party investor capital, and even more so with zero risk by trading through Darwinex Zero. We allow traders to develop as a trader and therefore then build their own fund through the Darwinex infrastructure. And we also give access to traders via a live account or virtual capital with Darwinex Zero. Now, of course, when we're talking about live brokerage accounts, there is a risk disclaimer, which is at the bottom of the screen now. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 65% of retail investor accounts lose money when trading CFDs through Darwinex, and you should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. Virtual accounts are provided by Darwinex Zero and do not access your live funds. Now, as I mentioned, we have 2 paths. So, well, actually, it's the same path. The path for any trader is to scale their AUM, scale their capital that they manage, and eventually, ideally, get investors trading or active in their strategy. Now, we have built the roadmap for traders to do that through Darwinex, but then we also brought Darwinex Zero into the picture. Now, a lot of people struggle with that distinction because they see it as 2 different companies, 2 different paths, 2 different everything, but actually, whether you're trading through Darwinex or Darwinex Zero, you have a common goal. The path is the same, and everything that you do as a trader needs to remain the same. The only difference between the 2 is that through Darwinex, it's basically free because you're trading through our FCA regulated broker, so you don't have to pay to access the service. Whereas through Darwinex Zero, of course, we have to set up the infrastructure and provide the virtual account, so there's a €38 per month subscription fee to that. But with that, you have zero risk. There's no risk of loss to your capital because you're not trading with a live account. Now, the roadmap is pretty straightforward to get investor capital. The only issue is it will take time. Of course, unlike any investor in the world, or I like any investor in the world, I should say, nobody will just give you capital to trade with without you proving yourself. And I'm not talking with a prop firm or artificially generated trading environments. I'm talking about a real trading environment over an extended period of time. And that's who we are and what we do. We give you that opportunity. So at first, we put you through something called a calibration phase, which is important to note. It's not a pass or fail assessment. So unlike prop firms where you have to pass a challenge to then get funded, this isn't a pass or fail experiment. It's simply so that we can read your trading behavior and understand at the risk level that you operate at. It lasts for 15 days, so on average 3 weeks, and you have to make 25 trading decisions. Now, a trading decision is constituted as opening or closing of a position. So roughly it takes 3 weeks, but it can take traders a little bit longer if you're less frequent in the market. Now, we do have a proprietary risk engine that manages all of our traders on our books. Think of it like having a risk manager if you was working at a professional prop desk, hedge fund, investment bank. You would always have somebody overseeing your risk. We have a 24/7 proprietary risk engine running on all of our traders, managing their risk and keeping their risk at a value at risk of 6.5%. Again, I promise that I wouldn't go too complex today. So if you want to understand more about that, either watch some of our previous sessions or come back on Thursday where I do go into this in much more detail. But we need to understand, okay, this trader operates at this risk level, so that we have to amend their trade sizes so that they operate at this risk level, which is the 6.5%. Now, if a trader is trading with too high of a risk, we will tune their risk down at Darwin level or on their DarwinX Zero account. And if they are risking too little and not putting enough juice in the market to make a return, we will also increase their risk. That's the calibration phase in a nutshell. Not pass or fail, just for us to understand your behavior. As soon as you complete the calibration phase, you then get entered into the DarwinIA program. I should probably move these two around, the permanent allocations and the DarwinIA on the slideshow, but they're interchangeable because you get them both at the same time. You're entered into the first tier of DarwinIA, which is DarwinIA Silver, automatically. As soon as your Darwin is created, which is a synthetic index based on your trading strategy, but it's risk adjusted, as I mentioned, you're then competing in DarwinIA Silver, which is a monthly competition across all of our traders on our platform, apart from the elite who enter DarwinIA Gold. Now, this monthly competition will reward you in capital allocations based on your performance. You get a rating or a score. If you hit 75 or above on the rating, you will earn an allocation that month. Those allocations last for 3 months, so you will hold that allocation for 3 months, and it goes from 30,000 euros all the way up to 375,000 euros, depending on where you are on the leaderboard. DarwinIA Gold, which is, like I say, for the elite traders, guys with track records over 8 months in length and hitting certain performance metrics. They last for 6 months, their allocations, and they range from 50,000 all the way up to 500,000 euros. Now, what's important to note is these allocations are cumulative. So if you hit an allocation 3 months in a row, it will stack up, each one on top of the other. So if you got 30,000 3 months in a row, at the end of the 3 months, you would be trading with 90,000. Then after the next month, the first 30,000 would drop off. So if you got another 30,000, you kind of wouldn't see a difference. That's DarwinIA in a nutshell. In DarwinIA Gold, you don't get a rating the same way that you do in DarwinIA Silver. Your allocations are based purely on performance that month. So whoever has the highest return that month will get the most allocation. Now, running side by side with this, we did release it towards the back end of last year, which has been super successful, our permanent allocations. Now, it's pretty much what it says on the tin. You activate the permanent allocation and it will stay on your account forever. So it's a 100,000 euro allocation that will not be removed from your account, unless the only caveat is if you deleted your account or paused your account, restarted your account, then the allocation would be lost. However, there's no drawdown limits, there's no time limits. If you've purchased and activated the 100,000 euros on your account, it will stay on your Darwin forever. This means that you can earn performance fees pretty much from day one. Day one outside of your calibration phase. If you purchased a permanent allocation or got funding with the statistics from your calibration phase. For example, I had a Darwin go live recently, last month, and I managed to get 40,000 euros in DarwinIA Silver allocation in the first month, which I think the month ended 2 days after my calibration phase, so I was entered into DarwinIA for that month. So you can get funded pretty quick, and we do have a high success rate of traders who get funded. Now, in DarwinIA Silver, I believe, and this is off the top of my head, so it might not be 100% accurate, but I believe we fund roughly 1,100 to 1,200 traders per month. And in DarwinIA Gold, it's about 100 traders. Now, the success rate is a lot higher than what you would see elsewhere because we don't enforce such harsh conditions or rules onto traders. In fact, there are no rules, just trade as well as you can. The next step on the roadmap is investor capital. So when you enter DarwinIA Gold, your Darwin then gets open to investors. So we've built the Darwinex Investor Marketplace, which, as I mentioned at the beginning, currently has over 100 million US dollars invested into it. And this is by third-party participants, not by Darwinex. Once you're in DarwinIA Gold, your Darwin gets live and listed on the Darwinex Investor Marketplace, and an investor can come in, view your statistics, and allocate capital to your strategy, again, giving you a performance fee bonus on any profits you make on that investor capital. It's all held through the Darwinex infrastructure, so you don't have to personally get licensed or accredited to manage the investor capital because you do it through Darwinex. And then lastly, that's very similar, we have the Darwinex Labs Index, or the INDX, which is our hedge fund. Now, this is currently live on Bloomberg, but it is going live to retail clients within the next month, I would say. I can't make promises, but roughly within the next month, the index will be going live for retail participants. And this is basically a hedge fund which is invested into a portfolio of our top performing Darwins. I think at the moment we're just over 100 Darwins invested or in the index, and it's already risk adjusted for you or risk diversified for you, so that as an investor, you don't have to come onto the marketplace and start picking and choosing which Darwin you want to be invested into. You can buy into the index and you already have a diversified portfolio of trading strategies. Now, it's great because the index has just hit a new all-time high this week. So I think it's, if we skip 2 slides ahead, I could really do with updating this screenshot, which I'm going to do for next week's session, because we have just hit a new all-time high this week. So the track record has been incubated since 2020. We've been incubating it with our own company capital. And like I say, we'll be going live hopefully within the next month. Has done over 205% return since inception. That is now over 220% return. As I say, we have now hit a new all-time high. Opening to investors soon, and the AUM is currently redacted, and that's purely because it's not live yet, so we can't give away that until it goes live. If we just come back, so the ultimate goal to scale your strategy through Darwinex Zero is to ideally have a permanent allocation that stays with you for the whole lifespan of your career with us, because you will, even through periods of poor performance, you will always have that 100k allocated to your strategy. DarwinIA, this is where you'll probably make the most amount of money to begin with, purely because it's on a monthly basis, and dependent on your monthly performance, you will earn allocations. Investor capital may take a little bit more time, but it's a little bit stickier when you get it, and investors happy to sit there, know their risk, know their exposure, and let you generate a return for them. And then the same with the index. The index is the final goal, or maybe not the final goal, but the final hurdle that you want to overcome. That's the wrong way to say it. I guess it is kind of the final goal, and then you just scale on all fronts. But we're here to help you scale. We have so much in place to try and scale our traders. We have 100% aligned interests with every single trader on our platform. We don't trade against our traders, so we don't actually take positions against our traders, unlike most brokers, and we actively invest in our top talent as well. So we are here to see our traders succeed. To give you an oversight on how the accounts work and how it all works at Darwinex Zero, without going into too much detail like we do on a Thursday, we have this image which I think perfectly depicts on what exactly happens. We have a trader. They open an account with MetaTrader 4 or MetaTrader 5 through Darwinex Zero. Any trade that gets placed on those accounts gets processed through the risk engine. The risk engine then opens the same trade on the trader's Darwin, but at a risk-adjusted level. Those trades on the Darwin then get copied to the investor, the DarwinIA capital, the permanent allocation capital, and the index capital that's invested in the strategy. Can't get any simpler than this when looking at how to explain how your Signal account corresponds with your Darwin. What's important to note is they won't ever show the same numbers, because we do risk adjust all of your trades, so there will be a discrepancy. Again, it's completely unbiased, and it's just based on the amount of risk exposure you take to generate a return. The higher risk you take, the more likely it is that the Darwinex risk engine will scale your exposure down at Darwin level. On the flip side, again, I've had this and currently have this in my experience. My portfolio of automated strategies runs at a value at risk of 1.4. So the risk engine actually increases my risk by 4.5 times. So whatever trading size I take at Signal account or on my MetaTrader, my Darwin takes 4.5 size of that trade. So if I open a 1 lot, the Darwin would open a 4.5 lot. So it does work both ways. Now, if you want to know more about who we are and what we do and go into more of the in-depth and advanced topics, I would definitely recommend checking out our social media channels. We have a TikTok, Discord, Instagram, YouTube, Twitter, or X, sorry, LinkedIn. And I've been posting our short form content on all of those platforms. The short form is great because I'm trying to get succinct explanations within a 30 to 60-second period so that you guys can understand things quickly without being too overwhelmed. There's no point sitting through an hour-long presentation on the intricacies of DarwinX Zero because it's likely just going to overwhelm you. The short form content is fantastic, and we've had really great feedback that we're trying to explain things in such a short manner. So please, please, please check that out. It might answer any question that you may have. And if you have any questions now, I'm also happy to answer any questions that you guys have now. Again, I apologize that it's not super in depth, but I like to keep this session super chilled. And then the one on Thursday, that's where we go into all the detail about the risk engine, about value at risk, and all of those complex things. Finally, I just want to say thank you all for attending the session. We will be back tomorrow at 4 p.m. UK time to do a strategy development session, which are fantastic. It's my favorite session to run every single week, where we go over somebody in the audience's Darwin, take a look at what they're doing well, what could be improved, and ways that they could proactively improve their trading strategy based on their statistics and their data from their actual trading experience with DarwinX Zero. I'm just going to check the other social media channels to make sure we haven't had any comments. I see there's a couple on. There's a couple on Instagram. Somebody's commenting in a different language, so I'm going to have to translate that. But isn't that the same with the virtual with DarwinX to get investors, or you just need to use DarwinX Zero? That doesn't, I'm not sure that makes sense, but isn't that the same with the virtual with DarwinX, or to get investors you need to use? So to get access to investors, if you trade through DarwinX, then you actually get investors on day one, or access to investors on day one. At DarwinX Zero, you have to hit DarwinIA Gold, which takes a minimum of 8 months. How much would you need to lose investor funds to lose it? Like funded accounts, is there a max loss limit? Can you save these if you don't or haven't checked? Okay, so there is no max loss limit. We obviously limit your exposure to 6.5% value at risk so that an investor can kind of sit happy knowing that they're not going to blow up every month, and that the max that they have at risk with a certain confidence level is 6.5%. Of course, things can happen and they can lose more than 6.5% in a given month, but they know that there's a high chance that they won't. It's all down to the investor's discretion. They can allocate and take money away as they please. We can't stop them, but there is no max loss limit. It just depends on an investor's risk appetite, I guess, and whether they're happy to sit through a drawdown or not. And I think that has it for all the questions. So guys, if you do have any further questions, please feel free to join the Discord and message me on there, or DM us on any of our social media platforms, and I'll always be happy to get back to you. As I said, we'll be back at 4 p.m. UK time tomorrow afternoon for the strategy development session, and then back on Thursday at 4 p.m. UK time to do a deep dive into value at risk, exposure, and everything to do with the risk engine. So guys, have a fantastic evening, and I will catch you all in the next one.